All right, good afternoon, everyone. Futures Brizio here, 3:30 p.m. on Friday, November 7th. And I hope everybody had a great day and had a great week and looking forward to the weekend. Um, as always, make sure you smash that like button, subscribe to the channel. Any questions or comments, leave them down below as always, and we'll just jump right in. So I want to do something a little bit different today. As I've been talking about, we have not had the advantage of having commitment or traders data to help us with our kind of longer term outlook for direction of some of these futures markets. And, we're relying mostly on seasonality and price action. And, I wanted to acknowledge that again. And I don't know when we're going to see COT data back again. I suspect it will be sometime this month. They'll finally settle their differences, but when that will be, I don't know. Certainly won't be today. So now we're at about 6 weeks or so since we've had any updated COT. So we obviously cannot use that data at all. So because the last update was September 23rd. So what I wanted to do today is talk more just from a technical standpoint on some of these markets and just one thing you can do. And this is more for you swing traders. It's not really for certainly not for scalpers, and not so much for day traders, although, you could use it for day trading too if you have shorter targets or you don't like holding trades. The setup still would be the same. So all my analysis here is going to be on the 4-hour chart. Okay, I really like the 4-hour chart, even when I'm using COT and everything. My analysis usually is my initial analysis in terms of trade direction, overall levels, often starts on the 4-hour chart, and then I'll step down further, potentially for entries and exits. But for the sake of this video, I'm going to stay almost exclusively on the 4-hour chart. This is a really great time frame, in my opinion. It's I would say a middle of the road time frame, but it really helps provide a lot of great levels without going out to crazy long time frames like the daily and weekly, which are okay, but may not be as practical in futures though. And so I really like the 4-hour. And of course, you can, zoom out on your chart and you're going to get basically the same view you're going to get of a daily chart, just with a little bit more detail if you need it. So we're just going to talk about just simple technical stuff and use 2 moving average indicators. And I do have this chart set to Heikin-Ashi candles. You can use regular candlesticks too. If you don't like Heikin-Ashi, or if maybe you're using a platform that doesn't offer it or whatever, you don't need to. I like using Heikin-Ashi candles just to kind of smooth out some of the noise. Although, as I've said in previous video, they do have limitations that you have to understand before you use them. So, but this is TradingView, so it is quite easy to switch back and forth between regular candles and Heikin-Ashi if I need to. Much easier than in MetaTrader, where I have to actually change templates. In TradingView, I can just go right here and just pick candles, and it changes everything to candles, right? As opposed to using Heikin-Ashi right here. So, okay, so we'll just jump right in here. So for indicators, the only 2 I have on here, as you can see up here in the corner, is a 100 period simple moving average and a 31 simple moving average. You're like, why a 31? Well, it's a good medium between a 50 and a 20. I find that the 20 is too noisy, and the 50 is good too. I mean, I can kind of flip a coin between the 30 and the 31 and the 50. But for the sake of this video, we'll leave it on the 31. And the 100 is more for just kind of longer term levels. What I would consider to be really excellent entries, but you're just not going to get a lot of them. So if you're relying just on the 100 in a trending market. All right, so let's start. This is crude oil. Let's start with something else. All right, we'll start here with rice, just because the first one I picked. So this is the 4-hour chart of rice futures. And you can, of course, see this is in a downtrend. And if we just look at opportunities here, you can see the 31 period moving average holds this price really nice. So you can basically look at taking trades in the direction of the trend on any kind of retouch, as long as this trend's intact. on retouches of this 31. Now, I will note that at the bottom here, where we currently are sitting, we are running a little bit potentially out of some steam here of this downtrend. So it's going to be interesting to see what happens. This is just kind of an aside that we've had, multiple attempts at breaking through this level here, and we're not seeming to be able to get through it. Now, I don't know. That doesn't mean it's not going to continue through it, but it's the first time since we've kind of looked back here that we're struggling and had multiple attempts at a zone. And, it is at the point where potentially we might see this turn. I don't know. I did mention from a seasonality standpoint that rice tends to start going up in November through January. So maybe that is what we're looking at here. I don't know. I just wanted to note that. But if we just look back a little further at this downtrend, you'll notice all of these places again where when prices, in this case, trending down underneath the 100 period moving average, then the 31 becomes my focus. I'm not really looking at the 100 at this point, really from here down. I'm looking at the 31. I'm looking at entries, assuming that you didn't get in at the perfect time at the beginning of the trend. Okay, but all of these areas right here where you see price pull back and tag this 30 are all entry points. Okay, you can clearly see that, which is why I like this moving average. Now, you're going to say, well, what about right here? Okay, well, so here the 100 period was violated, broke above the 31, then it broke above the 100. This was basically still just a pullback on the bigger picture. All of this is intra-trend, of this leg down and then this leg down. These are all just little minor pullbacks that the shorter moving average picks out. This is a bigger correction, but it's still part of the overall downtrend. So how do I use this? Well, and again, guys, I'll tell you, moving averages are lagging, and no strategy is ever going to work perfectly. This is no different. But if price breaks the 100 period moving average, then the next thing I'm going to do is I'm going to look back in time and I'm going to find the last time that the 100 period moving average was violated. And I'm going to use that as my potential kind of structure area. So if we look back here, you can pick out one of two things here. You can either pick out this area right here, okay, where price is above the 100. Now, this was the last little vestige of a little uptrend move here. Or you can pick this level out right here, which is also above the 100. But whatever, let's just pick this one. It doesn't really matter. Well, so then we look here and we're like, okay, well, price comes up here. Yes, it violates the 100 period. So I wouldn't be looking to enter a short right now. But this is why I always said, even with COT data and seasonality, market structure still has to be in your decision making. So if I look left here, I'm like, okay, well, yeah, this is a pretty big correction, but overall, the market structure hasn't been violated. Yes, it took out this structure right here, and it took out this one right here, but these two I can feel are just part of this downtrend, kind of in line with this overall. And since these are smaller pullbacks, I don't look at these as kind of key levels that would void the downtrend, okay? And so, but when price gets above the 100, now I'm going to sit and wait. And this is actually, the ideal place to enter, okay? Because now you've got potentially the lowest risk and the most. Imagine if you got in like right here, or even over here back underneath the 100 and you traded it and you were still in that trade today. I mean, first of all, you would have been in this trade for over 2 months, which, maybe you would, maybe you wouldn't. But theoretically, there's 2+ months of profit here to capture. Okay, so we look left and you're like, okay, we're staying below this level and we're staying below this level, whichever one. So as long as these hold, then I'm still looking for a down move. So we let this move play out. And then essentially with Heiken Ashi especially, on the first kind of bearish candle, then I would re-enter. And to me, that would be this one right here because we've got, remember on Heiken Ashi candles, on strong bearish momentum, there's generally no wick on the top of that candle, and this one right here has no wick. Now, you could enter on this one too. Either one, in hindsight, would have been fine. But you get in here, you put your stop above this swing, okay, and you just leave it. And if it works out, great. If it doesn't, then, it doesn't. Maybe you were too soon. Maybe it will end up being a reversal. Who knows? Okay. So, that's one way you can do this. Now, granted, these are 4-hour candles, and there are no micro or mini rice contracts. So, the risk here is definitely decent. You shouldn't be trading an asset like rice unless you've got a decent sized account. But you can do this on any micro or mini asset too. So it really doesn't matter. Now, coming down to where price is now, we have not seen the 100 period be violated anywhere on this. So this 100 period, like I said, would not be a factor. Now, let's say price at this point remember I told you we're kind of sitting at this bottom. Let's just say price breaks back above the 100 period right here. We get a rally, we push through, and we close above this 100 period moving average. Then you're saying, well, geez, the next area above the 100 period is way back here. So you're going to say that this now becomes your structure area, either right here or whatever, split the middle. I don't care. And yeah, basically that is true. Now, it doesn't mean that you can't trade this up move because there might be a Fibonacci retracement here. Maybe it'll go up 61%, 70%, 50%. If you get, price breakthrough and then it makes a higher low and starts going up, you can trade the counter trend move. You have to be a little bit more careful on your trade selection because overall you still are in a downtrend on the longer look. But as long as this area is not violated, you're still technically in a downtrend. Although again, you could trade this move back up. Now this on the Heikin-Ashi chart, there was no trade here to trade this counter trend move. Every candle on this pullback was bullish. Okay, so now in a shorter time frame, you might have been able to find an area, but this lasted so this was August 5th through August 12th. So this was a week. So for 1 week, you would not have traded this market. You would have just let it go and let it do its thing and let it work its way out. Now, you could go to a shorter time frame and find an entry moving back up here. I don't really want to get into that. I can do that another time if you want. I really just want to make this as simple as possible in terms of just trend trading and using the 4-hour as your basis. Okay. So that's rice. I want to see. Let's see here. This is Canadian dollar. I want to talk about that for a second too after. I'm just trying to find something that's a little easier to show you guys. By the way, yeah, I'm holding a soybean trade through the weekend, but so here's another example on soybean futures. So we just look at this action right here. We were coming down, we break, we start trending down, we're below the 100, okay? And then we have this higher low put in right here. Price goes up, comes down. This is tradable right here, but you can see it didn't make a new low. And then bam, we get this big punch through the 100 period. But where is our structure point? Well, on this time frame, it's back here. So as long as this is not violated, we're going to maintain a bearish stance. And then as soon as you get this first bearish candle, this is a little doji right here, you could enter right there. I mean, we're getting no bearish candles here at all. You can enter right there, or if not, you could enter somewhere here, although this is a pretty big candle. But you enter right here, it's low risk, right? Enter here, put your stop above this swing, leave it alone, and boom. You went down for the next, let's see, this July 6th through the 15th. You went down for like almost 2 weeks of just pure downside action with only a small little pullback here underneath the moving average. All right. It happened again. Bam, all the way up. Bullish candles. Pop through the 100. Here's your structure level right here. All right. No look back. Price went down. Had a little pullback right here and kept down. This would have been another area you could have entered if you missed it, or to add to your trade would have been right here, right? On this pullback. This clearly was corrective. And again, inside of there, we have like a minor structure level. So now that's our structure level, right? It wasn't taken out. You got, all these Heikin-Ashi candles with big wicks and decision candles. This is another entry right here if you wanted to add to your trade. all the way down, another hit on the 31. This is another entry right here. And then finally we had a change of direction. And then we start going up here. Okay, this is what I was talking about with trading the counter trend move. Okay, now on this, again, soybeans can be pretty volatile. So on this, we did end up taking out the last 100 period structure, which is right here. Now, we came back up to it. You can see everybody else sees the same level. Sellers tried to come back in here. You could have sold off of here. I mean, this still would have been a trade that would have lasted you for, for, let's see, the 14th through the 5th, a day and a half, you would have been in this trade. All right, sorry guys, I had to pause the video there. I had someone come to my front door. So, anyways, so I kind of a little bit forgot where I was, but so yeah, so that's the basic strategy, guys. Here's another one. This is the Canadian dollar, and again, same thing. We have this downtrend going. These are all great entries along the 31, and then we do start to pull back here. And again, this is some of these things where, depending on how you want to manage your take profit levels, some of these could turn into losses, right? So you have this entry here. Hopefully you would have seen like this double bottom here and know that price probably is going to have a hard time breaking through here. And then we went up and we kind of got to the 100 period again. There was kind of another sell opportunity right here. Again, didn't really do much, but there was a short-term trade in here. But more importantly, then we broke higher. We get above the 100 period here. This is why I told you, you could trade counter trend. This is actually an area here where you could have considered a long. Price kind of went here, pulled back to the 100, and then made it a move up. And this could have been, a nice bullish trade. Now, once price gets above the 100, you're like, okay, again, we look back, we say, where is our last move above the 100? It's way back here. Okay, it's way back here. So we know we're still in a downtrend. We trade this, and then potentially on the first bearish candle that forms, we're going to re-enter short, knowing that we are overall in the bigger picture still in the downtrend. Okay, now currently on this asset, again, this Canadian dollar futures, we put in an all little double bottom. Now we're back through the 31. So now we want to see what happens here. Are we going to get back above the 100 period here? Since we're now above the 31, and then get a push down off of that. Chances are, since we've now gotten past the 31, chances are if we get up to this 100, chances are we will at least have a little push higher. But where is our current swing point? Well, it's right here. Okay, so we're still in a downtrend. So even if we get above here, as long as we hold this area, we're still basically looking for shorts. Now, you don't have to trade the counter trend, even if it looked like there was a setup. You could just wait, and you could just wait for price to get somewhere up here and look for, a nice bearish candle back down and then re-enter there. Okay. Chances are when price gets, you can see what happens around the 100 period moving average is when it tends to start chopping. There's a lot of indecision going on here. But normally when it gets to this level, it probably is going to go a little higher. So if price gets to the 100, I'm not going to just take the first bearish because it's going to be a reaction off here because everybody sees this area if they're using moving averages. Anybody that's using a 100 period, which is a pretty popular moving average. Not the most popular, but it is one that's looked at a lot. And so when it hits this moving average, there probably will be a couple of opportunities to push lower. Probably see a couple of small bear candles in here. I wouldn't necessarily just jump right in on those. That's when I might go to a shorter time frame and look at the market structure. Like, we had this right here. We have this area right here. If we jump down to, let's say, a 1 hour chart and we look at this area, okay, we did have kind of a break of this structure right here, but not really. Like, so we have price come up, and then this was that selling point on the 4 hour chart. But you can see if we just put our cursor there, price never really got through this area. It threw a bunch of wicks and then went higher. So that's what I'm saying about telltale signs that this is not a good place to enter short. because, or if you did go short here, your take profit probably would need to be around here. Okay. And then price comes up again. There's no structure break here. The price tries to go up, rolls over again. No structure break here. No new high, but no structure break either. And then bam, it shot up. And this actually could have been an entry long on this time frame too, until the downtrend started again. Okay, so that's how you can use kind of that second time frame, that shorter time frame, the 1 hour, maybe 30-minute, 15-minute, to just confirm. But watch, if price gets through this 30 pretty aggressively and gets up around the 100, expect some consolidation and chop. But I wouldn't necessarily expect a big push to the downside off of this level. It probably is going to go higher before that downtrend continues, and that's what happened here. And so are we going to get to that point again? We're going to get through the 100 here, and then, you know, chop around and maybe go higher. Probably won't get back up to this level, but maybe some kind of Fibonacci heading back up there. You know, like, you know, the 50% gets us a little over that, 61.8, 78.6, gets us, you know, well above this 100 period moving average. Okay. All right. So I don't want to beat a dead horse, guys, because I actually got to run anyways, but I wanted to just point that out. Oh, Canadian dollar. I just want to mention really quick. You guys know on my previous videos, I was talking about the Australian dollar and the British pound. Great assets to trade. Good COT data. Follow COT well, which we don't have right now. Big issue with that is, since I trade New York mostly, because especially with the British pound, in general, the currency markets, the heart of the currency markets is London, all right? The Forex, those of you that trade spot Forex, you know the London session is the prime session for currency movement. Not that it doesn't happen during New York, but more good setups happen during London. And, you know, that was the issue. Canadian dollar and, British pound and Australian dollar, but especially the British pound, most of those setups that I could see on the charts, I was missing them because they were happening when not on the charts. Now, Canadian dollar is not that much different because it really doesn't matter which currency. The currency markets move a lot during London. However, because this is a North American currency, it does have more opportunities during the New York session than the British pound does. So even though I don't like it as much, it doesn't move as nicely as the British pound. And I don't really know how it is from a COT standpoint. I haven't really back tested it. Once we get COT data back, I'll look at it. But from just a standpoint of when the trades happen, the New York session is better. If that's the better session for you, then I think the Canadian dollar is a better option. You can't trade the US dollar in this format in futures, so you just don't have that option here. But I can trade the Canadian dollar. So that's why I'm using the Canadian dollar. But it would be the exact same process with the British pound or the Aussie dollar. Okay, and so that's what I'm doing. So this will be an interesting test right here as we approach this 100 period. What does it do when it get up here? Do we just kind of chop around and continue to go higher? And then, which I would like to see it do. I'd like to see it get back up into this area, and then, you know, paint a nice bearish candle and then ride the next wave back down. So we'll see what happens. That'll probably occur, you know, if that's going to occur, it'll probably be early next week, and we'll track it and we'll see what happens. All right. Anyways, guys, I hope that helps. Just another way that you can swing trade these futures using the 4-hour chart primarily. Doesn't mean you want to ignore the shorter time frames. You can use that time frame, shorter time frames, to help you fine tune some entries and exits, or look for counter trend opportunities like I showed you a little while ago on this, or areas where you don't want to re-enter the larger trend because the setup's not really there yet. Okay, and sometimes that might be hard to see on this time frame. You might have to drill down a little bit, but most of your analysis is going to be on this time frame, and that's where you're gonna spend most of your time. Sorry, guys, my microphone closed off for a sec. All right, so I'm gonna leave it there, guys. Questions, comments, leave them down below. Smash that like button. And I hope this was helpful, give you an opportunity to back test some of this. You might have to fine tune your moving averages a little bit, but I would stick to the 100 as the longer one. It's just this shorter one, whether you want to use a 20, a 30, or 50. Play around with it depending what market you trade. Some might be better than others. I've gone back and forth between the 31 and the 50. Kind of a coin flip, but I think the 31 is a good in between. I think the 20 is definitely too short. And the 50 is fine, but you do lose some of that granularity, especially on these big swing markets. Like if I put a 50 on here, this would pull the way off the price, and you wouldn't be able to have these nice timings right into the 30, okay? Because the 50 would be sitting up here somewhere, and you wouldn't be able to use that 50 period for bounces because it's probably going to be offset the price most of the time. So that's why I like the 30. All right, guys, I'll leave it there. Have a great weekend. We'll be back next week, and we'll see where we're at with all this. All right, guys, take care, and we'll talk soon.